Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 7th of November. All right, now the key theme here, dollar steady as risk rally eases, right? Now, I mentioned this yesterday that you're probably going to see a little bit of a retracement from Friday's US dollar sell-off just because there's no data coming out. So the market gets unsettled, holding those positions, and they start to sort of square them up, take a bit of cash off the table, if anything. Now, the key focus today, the RBA, right? Interest rate decision now. Just come over here to show you what's coming out. There's not a lot of data coming out today, to be honest, and this is why the RBA is getting a lot more attention. Now, after the CPI numbers came out last month, I was like, okay, the RBA is done. But there has been a lot of pressure. New RBA governor, Michelle Bullock, wants to sort of put a stamp on the sort of economy and has talked up really the prospect of a higher interest rate hike. Or higher interest rates, I should say, this month. So 0.25% is factored in. Now, outside of that RBA announcement, there's some Halifax house price numbers, industrial production out of Germany. And then you got, balance of trade numbers. I've never been, unless there's something big going on, I don't see these things coming into play. We do have a few Fed officials talking there as well. So not a lot of data. And that's why you start to get a bit of a drift in a bunch of these key instruments, right? So now if I just come over here, just behind this, we do have it, like this is the Asian session, right? We have a perfect risk-off scenario here, right? Equity is getting hit across the board. You got Euro, Sterling, Aussie, Kiwi down and all the dollar pairs up. This is picture perfect, right? To me, what does this do for me, right? Well, the key thing is we've got the RBA interest rate decision. It is factored in. I actually think there's a slight chance they may not hike. But even if they do, I think they're going to say, you know what, we've hiked, that's possibly it. Because the only real trade here is to the downside. With the momentum here in the market, from the risk-off profile, Aussie is moving down. And that's the easiest side to be looking to trade, right? If I just come over here to the charts, okay, let's just blow this up a bit. Now just looking at where the Aussie is, okay, if I just get my pen. Where are you? Okay. All right. So obviously after the US non-farm payrolls, you get that rally higher, expectations for a rate hike. But you know what? As I was just saying, I don't see too much more topside, right? Whilst the dollar is sort of marching along at this point. Okay. So to me, the best possible trade here, if there's no hike, right, it will drop very quickly. Even if they do hike, it might go up 10 points or so because it's already factored in. So you're not going to get that sort of abrupt move. And it really comes down to the statement, okay? As I said, I would expect if they do hike that they would just let the market know, look, okay, that's it for now. We'll see what happens afterwards. Because if they start sort of treading on or put their foot on the throat of, the economy, they could choke it pretty quickly. And that's not the way to sort of manage the economy, right? So to me, the best possible trade scenario is down, no hike, or a neutral, very neutral statement if they do hike rates. Okay, and if you have a look across the board here, across these various instruments, you will see obviously very clearly just this nice little bit of a retracement. It's only a little bit at this stage, but I can see it being a little bit more as we go through the day. And this is on all the pairs, right? Once again, when you're looking at your charts technically like this, you should be getting confidence that everything is moving. The dollar is in control here. Everything is moving uniformly, and that builds confidence, right? That's what I'm saying. If the Aussie, if they do raise rates, well, you know what? It's already going down. So you're just sort of fighting momentum on the downside. And that's why I really think looking for like a no cut or a neutral. It wouldn't be a dovish statement, but it will be neutral. And that could lead to the Aussie sort of just giving up those gains it had over the last couple of days. Equity markets, well, sort of stalling at the top here. Once again, the markets just won't go ballistic straight up. We're having a bit of a pause. Once again, there's no key data coming out. The market sort of starts to feel out what's going on. If anything, I would think the equity markets may just drift a little bit lower as we await, Fed Chairman Powell's speech come Wednesday, right? And that's where we are. So the key to actually trading these markets, especially in a week like this, right, where there's not a huge amount of key data coming out. It's actually sort of working out where the momentum is, right? And then trying not to fumble or stumble into a situation where, you know what, you've got, you're working with or against the market, right? As I said, right now, we've got a risk-off profile. It's very clear through the Asian markets. European equities, we'll see how that go. But, you know, Euro, Sterling, Aussie down, all the dollar pairs up. To me, this is like a green light. All we need is, for a really good trade here, is like weak numbers, especially out of the Aussie. What does weak numbers mean? It means no hike or a neutral statement following if they do hike, right? And that's where the cash is in my eyes. All right, guys, that's all from me today. Not a lot going on. Yeah, good luck. Just manage your risk. There's no need to go mad this week. We may see some great opportunities. It's like quite often the weeks where you don't have that massive top tier data that you start to see some clean moves. And we've got nice, orderly markets. We've got good direction. You just need to wait for the opportunity. All right, guys, good luck. Cheerio.